The premise of ESG investing is that you can earn outsized returns by investing in companies that pay attention to environmental, social, and corporate governance issues. But since the war in Ukraine, the opposite has been true. Energy and defense stocks have been market leaders, and tech stocks have been weak. Lauren Foster wrote Barron's cover story on it this week, and she joins us now. Lauren, thanks for coming on the show.
It's great to be with you, Jack.
So since the Russian invasion, the stocks favored by ESG-focused investors have really lagged, while the stocks they avoid have been surging. Why is that?
Yeah. So, Jack, you mentioned the war in Ukraine, which is now in its second month. The conflict has pushed up prices for commodities like food and energy. Just this week, we heard that consumer prices in March were up 8.5% from a year ago. Now, that's the sharpest rise in more than 40 years. And a big part of that was fuel prices. So the war has aggravated global inflation. Now, that's been good for energy stocks, but not so good for tech stocks. ESG funds tend to avoid energy and defense stocks, but tech is an ESG favorite. So here's a quick snapshot of energy versus tech. If we look at the Energy Select Sector SPDR Fund, it's up more than 40% this year. On the other hand, if we look at the Technology Sector Select SPDR Fund, it's lost more than 15%.
Okay, so ESG skeptics are saying, "I told you so." Is this whole concept fundamentally flawed?
So great question, but no, I don't think ESG is sort of fundamentally or fatally flawed. There are certainly some investors who would love nothing more than to say, rest in peace, ENG. In fact, I spoke with one of them, Aswath Damodaran, from NYU's Stern School of Business, and he was a guest on your show just a couple of weeks ago. You know, he's a leading expert on equity valuation, but he's also a vocal critic of ESG. And he says Russia-Ukraine is the first of many tests for ESG, and the moment of reckoning is coming.
Will we look back on this ESG thing and say it was just a passing fad?
So I'm sorry, Jack, no, ESG is not going anywhere. Like it or not, it's here to stay.
Lauren, I'm kind of curious if you're seeing maybe like a third way in ESG. Financial advisors would say that their older clients were against it, their younger clients were for it. But now there seems to be this trend of not shunning industries, but actually investing in them and trying to push them to do better. What are you seeing?
Yeah. So, Castle, you're absolutely right. ESG does tend to resonate with a younger generation. And I think there's certainly a case to be made for focusing more on engagement as an ESG strategy versus, say, excluding companies altogether or just being solely focused on scores from, external providers. So, one example of fairly successful engagement is activist investor Engine Number One, which forced ExxonMobil to revamp its board of directors in part to focus more on clean energy. So engaging with companies to encourage better practices is arguably a more effective way to drive change.
Lauren, with oil prices up, that can be a tailwind to drive people towards renewables. On the E side of ESG, how have those stocks been doing?
So unfortunately, not so well. Clean energy stocks have had a rough few months. That's in part because of higher interest rates and the rotation out of high growth tech stocks. Clean energy stocks are long duration, so that means that the companies will generate the bulk of their cash flow in the distant future. And growth stocks historically have underperformed in rising rate periods because their future earnings are worth less today. So earlier today, I checked out the iShares Global Clean Energy ETF. Its returns are down 1.5% this year, but over the year, down more than 10%.
Hi, Lauren. Jack Howe. You write that Russia's invasion of Ukraine will put the S back in ESG. What do you mean by that?
So, Jack, Ukraine is certainly showing us that the S is more important than investors thought. Social issues have an immediate impact on employees, customers, suppliers, but it's not an either or. It's not binary E or S. Investors need to focus both on the E and the S at the same time.
Happy employees make for a better company. Thanks very much for your insights, Lauren.